Welcome to the Investor Agent Podcast. I'm Steve Seymour, your host, where we help transform the human mindset from scarcity and lack to abundance and wealth, one conversation at a time. Steve Seymour here with the Investors Agent Podcast. Today we have Mike G as our guest. Mike, thank you for being on today. And I call you Mike G because I don't want to mispronounce your name.
It's a long Irish name, Giangiordano, South Philly.
Mike, thanks for being on.
Thanks
Mike,
for having me.
So yeah, I know you're heading to the Phillies game shortly, so we'll keep it short and sweet. But why don't you give me a little bit about your background? What got you into real estate?
Yeah, so it's been in my blood really since I was a kid. My dad's been doing it for 40 years, and before that, his dad and his dad's dad have done it. So it just came naturally to me, and I just kind of fell into it. I went to Drexel for college. I studied finance and econ. And then I worked in investment management for a little bit. I actually did a lot of different things. I worked in fundraising, but then I always came back to real estate. So when I graduated, I decided, let me just go into it full time and do it. And I like it. And I know it.
And what year was that?
2016.
2016.
Yeah.
Okay.
So I'm city through and through. I went to high school there and grade school in my neighborhood. I still live in the same neighborhood off of East Passyunk Avenue.
Nice.
If you're familiar.
Yep. And with having kind of inherited this real estate background in your family, did you go more towards the traditional agent side first, or the investing side? Tell me a little bit about that.
Yeah,
I know you have your hands in both.
Yeah, I started, and actually we do a little bit of everything. So my dad's an appraiser as well, and we do property management, and then we do residential and commercial brokerage. But I jumped in actually with the rentals. So I started like helping my dad rent his units, and then slowly turn into renting other people's units. And then I knew that naturally I was going to want to buy my own things. And I bought my first place with my dad and my sister in 2015. So I was 19 at the time. And then since then, I bought one or two a year. And now I've gotten like multi-family, mixed use, and single family properties. And I want to continue to do that and grow it and do bigger things. And then everything that I help my dad with and his family.
And it's great because you get to see kind of the broker side and the agent side, as well as the investing.
Yeah.
Right. And then you have the background in finance, and that's got to help.
Yeah.
The intention of this podcast is to transform the human mindset from scarcity and lack to abundance and wealth. A lot of people get thrown into different jobs or careers, and, they find themselves always having trouble just getting ahead.
Yeah.
And real estate is such an amazing opportunity. So really to just be able to share some information and knowledge that could really help someone potentially change their life, and give themselves or their family a better life.
Yeah, and even
in terms of abundance.
Being able to navigate like the government, like city government's really hard in Philly. They make it hard to be a landlord and a property owner. So just having that knowledge as well.
Yeah.
Last year I ran for public office, which was an experience in and of itself. It was a very tiring experience, and it was a rough experience, but I learned a lot, and it gave me kind of the framework to continue doing what I'm doing.
So, and you guys own a real estate brokerage, right?
Yeah.
How many agents do you have?
We have about 15 on our roster, but only like 5 are full-time.
Got it.
We've always been more of a part-time agency where people have other full-time jobs, and they come and go, and they do like a couple transactions a year.
Yeah.
But actually most of our agents are also investors themselves. So they have a lot of knowledge and experience, and they've been on average like 20 years in the business.
Wow. That's amazing. So, with someone that's an agent who is interested in getting investing, to me, this is the thing that I preach all the time, but I want to get your opinion on this, like versus focusing on just the transactional side. You said you bought your first investment property at 19.
Yeah.
Right. And that's really early on to get investing in real estate, and how that can potentially impact people's wealth and future. I just kind of want to get your take on the differential because you can only focus on one thing at a time, right? So the difference between focusing on investing versus selling, what do you think is the better route to go, and why?
Well, I guess it depends on everybody's own personal preference, but if you want to build like long-term wealth, long-term sustainability, like cash flow from rentals, I think you should have some mix in both, especially if you're an agent. If you don't own your own property as an agent, like how are you then adequately being a good agent to your client. You know, like
Yeah.
if you yourself haven't experienced it,
You're not
then how do you
walking the
expect-
walk.
Yeah, you're not walking the walk, exactly. And I think the other good thing when you invest is you're not susceptible to those market changes like we're seeing right now. When it slows down and you don't have the same amount of sales that you did for the past 3 years, for instance, at least you have something else to fall back on. You know, you have a stream of income, you know, to support yourself, and you have long-term wealth over time because, you know, real estate will always appreciate. There's only so much land. So over time, it's a very good investment to hold on to.
And what you said is really key because, you know, when agents are selling houses and getting big commission checks, it's great. You know, they can get paid very well. But like you said, there's outside circumstances that can very much shift your business.
Yeah, absolutely.
Right. Just the volume of transactions is down big time.
Yeah.
Towards the end of last year and this year, and, you know, possibly for the foreseeable future, had, you know, an agent not focused 100% just on transactional real estate, but buying some rental properties that have this passive income, some cash flow on a monthly basis to help offset what I call the commission roller coaster.
Yeah. You have good months and you have bad months.
Right.
And even just diversifying in our business itself, you know, like I started a lot of my business doing rentals and doing property management. That helped leverage myself to then jump into brokerage and, you know, helping landlords and then eventually some tenants buy properties because they're going to be in the market eventually, or a landlord wants to buy another property. They want to sell one, do a 1031 exchange and buy another one. So just being diversified in our business is good, you know, because especially to your point, when sales are slow and you have a slow month, maybe you pick up and do a couple rentals.
Yep.
You know, when we have like a new agent come on board, I always direct them to start in the rental business because it's a small, let me rephrase that. You can learn a lot in a small transaction, right? The paperwork is kind of similar, right? It's a bigger thing though when you're buying a house, but you kind of learn the framework. You learn how to talk to people, how to go to showings, how to show them
open a door.
Yeah, how to open a door, yeah. How many times have I done a super box and I've been standing there trying to get it open? I'm like, oh my God. I always
it gets them comfortable, right?
Yeah,
with
it
the
gets you comfortable because if you're not a type of person that likes to talk to people, like I could talk to a wall. So I have no problem talking to people, but it gets you kind of acclimated and you build a base of clients, you know, over time.
And a lot of those renters could become buyers.
And a lot of those landlords become sellers or buyers, you know.
You might pick up some investor buyers. Right?
Yeah.
So you said you invest in some single family, you said maybe mixed use and some multifamily as well?
Yes.
And that's all mostly in Philadelphia?
All in Philadelphia I own my grandmother's house in Scranton, Pennsylvania.
Gotcha.
My mom came to Philly from Scranton.
And you grew up in Philly?
Yeah.
Nice.
So
what do you think about the Philly market? Because I know, you know, we're out in the suburbs here in Westchester, PA, and the inventory is still the biggest bottleneck in our market. It's not the interest rates. Like the interest rates definitely hurt.
Yeah.
But it's ultimately the lack of inventory that's really bottlenecking the business for us. What are you seeing in the city? You know, are you guys seeing a little loosening in inventory, a little more transaction volume?
Same thing. Inventory is still low. There's still strong demand, and prices keep going up. So they haven't they hurt a little bit in the beginning when they took a sudden jump. You know, when they went from 3 to 6 overnight.
The acceleration.
Yeah, stopped.
Right.
But there's always going to be demand because real estate, people always need somewhere to live, and there will always be a buyer and a seller. And I believe as long as things are always priced right, it's going to sell. You know, maybe, you know, like over the past few years, it took a few weeks or maybe a week or a few days. Now it might take a month, 2 months, 3 months. But again, if it's priced right, most likely it's going to move quickly, no matter the condition of the economy.
Yeah, I'd have to agree with that. I wouldn't disagree with anything you said.
Yeah.
What are some strategies that you've used to like find deals? Because I know it's usually like the questions I get, well, how do you find a deal? How do you find the money? So I like to ask those questions all the time.
I think it has to do with your network. I mean, I'm a believer in having your hands in a lot of different pots. So I'm involved in like several different organizations, like not just real estate related, but nonprofits, and trying to give back to the community. Because I've found that when you're more involved and you have a bigger network of people, there's more opportunity. They may think of you later on. Oh, you know what? Mike was in real estate.
Yeah.
Let me call him.
Sure.
You know, I mean, I had somebody call yesterday. This is a funny little story real quick. He came to sell us a copier about 5 years ago. And he said, I have to tell you, you and your dad left such a good impression on me when I was now thinking about buying a house. I thought of you guys. Crazy. I mean, like, he came in to sell us a copier. It's like, I'm not in that business anymore.
5 years ago.
5 years ago. So I think it's the more you put yourself and you connect yourself, you know, today finding deals is tougher than it was when my dad was started, you know, like 30 years ago, 40 years ago. They don't fall in your lap. Like they used to be, somebody would walk in, hey, I want to sell my property. You would go take a look at it. I'm interested in buying it. Today, there's so much more information out there, and there's so many people that are in the business that it's tougher and tougher to find something. I mean, the deals I've come across, like my desk, have either been on the market, stuff that I saw and I was interested in, or like the one I bought last year was my teacher from grade school. So she called me and she said, I have this property, I want to sell it. And I said, let me look at it. I might be interested in it. So I think I'm circling back to your network.
Yeah.
And where you're connected and who you know.
I'm glad you bring that up.
Your business.
You know, because everything now has gone internet based, right? And we're so used to like people scrolling on Zillow, on Redfin, on whatever, you know, their agent's site. And there's nothing wrong with looking there. And like you said, you have found some on the market, but ultimately what I've found interviewing a lot of real estate investors is either they're doing direct mail and finding off-market deals, or they're stirring up leads through their network. Yeah. And the longer they're in it, the network becomes more and more valuable. So any tips for someone building that network? I know you said get involved in different organizations, but you know, like let's say someone's not really the type of person that wants to talk to anyone.
Yeah. I think you have to go to stuff. I think the more you learn about what other people are doing in your industry and industries connected to your industry, you make those connections naturally. I think
so.
It's
just
like,
put yourself out
into
a group, you know,
maybe
of people.
Go to like a real estate roundtable, like a lunch with maybe like a big developer in your area, or for me, like in the city. Before the pandemic, it was like every day I would be going to something every night. Now, since the pandemic, it's changed a
little
lot.
bit, yeah.
You know, there's a lot more virtual options. But if you're not one of those people that like to be on site talking, and you're not like a talker, but maybe it's a virtual event. You know, maybe it's like a Zoom meeting about real estate, you know, with real estate people.
Yeah, that's good advice. I always tell people, surround yourself with people that are doing exactly what you want to do.
Yeah.
So if you know you want to be a landlord, surround yourself with a bunch of landlords. If you know you want to be a home builder, go to the Home Builders Association. If you want to, you know, get into multifamily, there's multifamily training. So get specific on the area that you want to get into.
Listen to your podcast.
Yeah. Right? What about, you know, the big question is, well, how am I going to finance these deals? Like, you know, you started at 19. I know your dad has some background in real estate, so maybe you had some financing there, but you know, I don't know. I don't want to make any assumptions. How did you finance your first deal?
We applied for a commercial mortgage, and I didn't have much income at the time, but I was working. I had something, but I mean that me and my dad and my sister did help. It wasn't just me going about it. I'm another believer in, like, if it's too good to be true, it probably is. So there's a lot of that, like, financing out there, like no tax returns, no this, no that. Odds are those are probably not real, or they're not really good deals, you know, or the rate might be astronomical.
Yeah.
You know, I mean,
you're going to pay for something.
Yeah. I think you need to start, like I did, was saving, and you need to be diversified in that. Like, don't just put all your eggs in one bucket and just do real estate. Have like a retirement account for the future. Put some money away. You know, I have a finance background. So when I was in investment management, we had diversification of just not just, we had clients that had real estate assets, but they were in the stock market. They were in treasury bonds. They were in maybe now crypto. I mean, be diversified and have that liquidity ready so that when you find a deal that you want to go in on, you have the proper equity to put into it, and you know that you can support it, right? If the property sounds, like I said, too good to be true, it probably is, right? When I go into a place, like, I'm looking at, is this going to be one, long-term, a good investment, which most likely it will. If you're going to hold it, it's going to appreciate over time. And will it be an easy rental? Is it going to be a type of property that will rent easily and you don't have to worry about vacancy, carrying the mortgage for a few months? Look at the updates to the property. Are you going to have major maintenance you have to do? Changing a heater, replacing a sewer line like in the city, putting a new roof on. Look at those aspects and know that you have to plan to do that. So when those times comes, you have the funds to do it and to support it. But I think I'm more of a traditional route, like going the traditional route of like saving your down payment. And then once you have it lined up, applying for mortgage financing.
Yeah, and it's pretty simple, right?
Yeah.
It's a simple strategy, and basically anyone with some discipline can do this over time. The thing I've really liked in what you said is long term, right? Don't just look at the short term on the deal. Think about what it's going to look like 5 years from now, 10 years from now. And then the other piece of the pie is liquidity, because having some liquidity will give you some confidence to be able to take a swing at something that's new. The biggest thing is getting off the couch and doing this and like taking your first step. Did you find it was hardest to buy your first property, and then each one you get a little more confidence each time?
Yeah. Once you kind of get your feet wet, you get more confident in your decisions. And again, it's like especially when I tell clients that I manage their properties for and I try to rent, I tell all of them I treat it like it's my own, because that's a big part of it. Like when you're going out and renting it, don't just rent it to the first person. Make sure you seem like you have a good rapport with them. Do your background like they would do on them, like they would do on you when you're going to finance it. Like make sure that the pieces are in place. Some people, I think sometimes they rush into it because they're worried about it sitting vacant. Well, what happens if you pick a bad tenant and then they're stuck there for 6 months not paying? That extra month that you would have spent into really trying to find the right tenant and screening the right tenant, goes a long way. And maybe you find something that stays there for a while.
Yeah, turnover cost is as a landlord, turnover can be a very big expense. Mm-hmm. So you want to keep people there as long as possible and, have that all factored in, right?
Yeah.
So any tips on like types of properties to buy or, just general investing strategies?
So we tend to stay away from flipping. And I'll go back to what we were talking about long-term, right? Real estate to me is a long-term investment. When you go to flipping is like a whole nother animal, I think. You are very susceptible to changes in the market. So if you buy something today and then 6 months from now, the market has bottomed out, prices have come down, you're on the hook for that, that investment. And then maybe at that point you reevaluate and you hold on to it as a long-term. But to me, real estate is long-term, and you have to think long-term with it. You can't think short-term, because remember, it's a physical asset, right? It's not a stock.
Yeah, I don't even consider flipping an investment at this point. Yeah. I used to flip houses and I'd call myself a real estate investor.
Yeah.
And over time, I realized I was really running a business that involved, developing property basically, right? And
yeah.
Now it's investing is putting money to work, right? And investing in an asset that's going to produce income over time.
Yeah. And a tax shield.
Tax shield.
Prevent you from paying some taxes. I mean, you have a lot of benefits owning real estate.
Can you touch on some of the major benefits?
Yeah, well, the federal government, state, local governments incentivize people that own property by tax deduction. So you can write off your mortgage interest, your real estate taxes, mortgage insurance if you pay that. Any repairs or maintenance or upgrades you make to a piece of physical property, you have tax benefits. It lowers your taxable income. I'm not a CPA, but I mean, it is a good investment. Again, long-term, from not only a cash flow and perspective of you having long-term income, but you have a long-term tax benefit from owning real estate. So there's, besides just the appreciation and cash flow, but there's multiple, reasons to own property.
So other than cash flow and appreciation, tax deductions, one of the things let's go back to cash flow, is most people really they don't know how to evaluate cash flow. do you have any simple strategies or formulas that you like to use on your investment properties where, you know, if it cash flows this much, I'm going to take a serious look at it?
Yeah, I think that first and foremost, you have to make sure that it covers your expenses. So you have to look at what is the income coming in. Is it going to cover my debt service? Then you want to factor in, well, what are the taxes, the insurance? So you kind of want to do like a mini income statement, right? Maybe you do it by month, maybe you do it by year. And, you know, you kind of take the rent, times it by 12, take an annual rent. What's my debt service per year? What's the taxes, the insurance? Allow for repairs and maintenance. You know, you want to build in maybe like 10% a year for repairs, and you build in some vacancy and also turnover cost. And then you want to see kind of how I look at it is how long until I recoup my investment. So is it 10 years? Is it 20 years? Is it 15 years?
So,
I think
your down payment investment, your down payment closing costs, you know, you divide that by the cash flow, annual cash flow, and you know how many years it'll take to pay that back.
Yes.
And what are you typically looking for in terms of what's a good deal for you?
For me, I think within 10 years.
Within 10 years.
Yeah.
Yeah. And that's
5 would be a home
and that's
run.
very reasonable, right?
Yeah.
To find deals that meet that criteria. It's not a crazy strategy to say, you know, are you putting down like 20%, 25%?
Yeah, usually between 20 and 30.
20 and 30.
Yeah.
Because you said commercial loans. So
Commercial is usually 30, 25 to 30.
Yep. All right. Well, we're going to wrap up soon, but any last words of advice for anyone that's like kind of on the fence, thinking they want to get into the real estate investing game? Maybe they're an agent, been doing sales for a while, and they just want to get on the other side of the fence.
Yeah, I mean, I'm here to help. I mean, if anybody wants to reach out to me, like LinkedIn, my email, I'm happy to meet with people or maybe chat over coffee or over Zoom or over, you know, a phone call. I like to, like I say, give back. So if I can help somebody, give advice, I'm not looking for anything. It's just one person to another.
Well, we appreciate you offering that out.
And I had like a leg up over a lot of people because my dad's been doing this. So I'm appreciative of that.
You have generations of experience behind you.
Yeah.
So that's great.
And that's a lot, you know, that's different than people just jumping into it. So
absolutely.
I can see how you could be thrown into the water and it's scary, but
it'll
be okay.
I'm sure your dad's been through a couple market cycles, right?
Yeah, he has. A number of them.
Well, thank you for being on today. We appreciate your time.
Yeah, thank you.
Hopefully you guys found some value in this conversation, and we'll put Michael's information below so you can reach out.
Perfect. Thank you.
All right. Thanks.
Thanks, Steve.
Thank you for tuning in to the Investor Agent Podcast today. We hope you found it valuable. Please tune in weekly at theinvestoragents.com.